Hi, everybody. David Milan, Director of Investor Relations with Nighthawk Equity here. Today, I'd like to cover some of the basics when it comes to real estate investing. One of the fundamental profit centers of real estate is referred to as capital appreciation. Today, we have Drew Niffin as our guest, President of Nighthawk Equity. Drew, can you break down each of the profit centers of real estate investing and how capital appreciation factors in?
Yeah, sure, David. Good question. So when we talk about all the different ways that there is basically ways to make money in real estate, we have four of them. We call them A, B, C, and D. So you have appreciation, blocking taxes, cash flow, and drawing down the mortgage or principal pay down. So out of those four things, you're asking about capital appreciation, which is probably the biggest one. It's the value add component of it. So when we talk about capital appreciation, we're saying that we're going to push the value of an asset through the activities that we do. Now, unlike a single family home, where you're really just kind of hoping that the market rises, we can positively force the value to appreciate on an asset through pushing the NOI or the cash flow of the property. And we can do that through things like renovating units, renovating the exteriors, increasing the rents on the properties, managing expenses. And by doing that, we can actually push the value of the asset within our control and appreciate the value of the asset. So that's what we're talking about in capital appreciation. It comes alongside the taxes, the cash flow, and the principal pay down, but it's the biggest component of the four for how we make money in real estate.
Right. So with Nighthawk in particular, I know that generally we have a 5 to 7 year holding period for our assets, fairly standard holding period across the industry as well. When looking at that 5 to 7 year hold period, how much can your average investor expect their property to appreciate during that time frame?
Yeah, we're looking at Nighthawk. We're looking at an overall doubling of investors' returns over about a 5 to 6 year holding period. So that would work out to a 15 or 16% rate of return on their investment. Now, when you talk specifically about capital appreciation, I'll give you just a few examples of deals that we've done. So we bought a property called Tree Haven, 70 units in Huntsville, Alabama, a nice growth market for $1.6 million. That was in 2018, and sold it for $3 million 3 years later. There's another asset named Country View that we bought for $6.8 million in 2017. We still have it. It's being valued currently at $18 million. That's been a big success story as well, another big capital appreciation. And then lastly, there's a property called The Davis, also in Huntsville, Alabama, that we bought for $18.1 million just a few years ago. And it's currently being valued around $44 million. So big capital appreciation going into those markets. And that's all coming from what I said, renovating units, increasing the rents, pushing the cash flow on these assets. And then you take all that cash flow and you multiply it times its cap rate, and you're going to get big capital appreciation on those.
Yeah, those sound like some very successful stories in terms of properties we've done in the past, Drew. Now, one thing that investors might be thinking right now is, at what point does Nighthawk decide to sell the property? We talked about the 5 to 7 year holding period. It's not like some magic, after we get to the 6 year mark, we're definitely going to sell it. What else goes into and factors into that decision there?
Yeah, often when we decide to sell a property, it's because we think that we can't push value anymore, and or we've reached the holding period that we expected to for our deal, and we want to deliver on our promise to investors of returning their capital back to them. So it's a combination of, can we add more value? Have we reached our entire time period? And also, what is the market right now? Is this a good time to sell? And so we'll take all those in conjunction, kind of put them together. Us at the partner level will talk about those issues and make a joint decision whether to sell the asset.
That makes sense. All right. Thanks so much, Drew. Very quick video there. To wrap things up, guys, if you're interested in hearing more about Nighthawk's investment properties and you have not yet scheduled a call with me, please feel free to do so. You can always do so by visiting the following link. It's nighthawkequity.com/join. And feel free to schedule a 30-minute call with me. Other than that, I'm very much looking forward to it. And we'll see you guys next time. Thanks so much.